and welcome back to my Morning Report Analysis videos with me, Rich Perry, Market Analyst at Tech Markets on Wednesday 22nd of March. Looking at dollar yen, and this is the key chart I think that shows us that today I've gone through euro dollar, I've gone through cable, and they're both sort of retracing a little bit, but you haven't got that retracement on the yen, which suggests that the market that's a safe haven move rather than a dollar strength move that we're seeing in the markets today. Dollar yen continues lower. Now around 50 ticks down on the day. We had that sort of test of the 1160 key support yesterday. That support of this range that's been going on for over 2 months now. The key low coming in 1153 and then closing at 1171. But today it's continued lower, and it looks to be breaking that level. Now 1130 is also interesting because around a sort of 11 big figure to 1130 is this old pivot level, isn't it? These lows came back from February 16, March 16 at around 11 figure, 1098, 1104, and then you had these reaction highs of April and May around that sort of level as well, 1134. So it's these are key times I think for dollar yen in the outlook, because you also had wrong way. You also had this reaction low here, 1132 from November. So breaking below 1130, which is what we've seen today, is a key move. And certainly if it closes below that, I think that confirms the closing breakdown of this trading range. You then complete that pattern. That's a 400 tick range, 1160 up to 1560. Measured lower, that gives you 10760. So there is a big potential corrective move. And you look at this old reaction higher here, what's that? 107.50. So there is a big corrective move that we could see in this market, and again that's an old pivot, isn't it? 107.60. These are key levels on dollar yen that we could see now. So that's a 2.5 month trading range breakdown. If you see the closing range, that would suggest in the next couple of months we could see further losses down towards that 107.50 area. And you look at the momentum indicators, negatively configured 32 on the RSI, tends to get below 30 in these runs lower in the bear moves, and this looks increasingly as though it is becoming a bear move. And the MACD line's crossing lower, stochastics falling. It doesn't look great, does it? So that 1160 or 1132 initially, but 1160 level becomes resistance today. Already sort of it was becoming that sort of level, 1172. 1225 and 1250 also become resistance. All these levels on the near term sort of reactions higher if you see the RSI or MACD lines unwinding, but at the moment they're sort of still negatively configured. Look at this RSI failing at 55 over the past week, so anything towards the sort of 40, 50, maybe 55 level that sees the RSI unwind, I think that could be just jumped upon as a chance to sell. That 55-hour moving average is also becoming a basis of resistance. That's around 1227. So there is room for an unwinding move initially, but I'd say that rallies are probably now going to be seen as a chance to sell, especially if this if we see a closing breakdown of this range today. So I wish you good luck in the trading, and I'll speak to you later. Thank you.